Hello everyone, and welcome back to Everything Tesla Stock. Tesla Inc. is in a good position going into mid-2022, with bullish experts forecasting that the company's stock is going to skyrocket to a new all-time high next month. Analysts all over the world are claiming that the price may possibly be higher than projected if Tesla keeps doing what it's doing. Tesla stock has had a fantastic year, with a 55% rise in price, propelling the company's market worth past $1 trillion. Daniel Ives, a highly acclaimed stock market analyst, has stated that Tesla expects its stock prices to hit $1,400 next month. Dan Ives is the managing director and senior equity analyst at Wedbush Securities, focusing on the software and technology sector. Dan is also one of the world's top 10 stock analysts, with nearly 2 decades of expertise monitoring the larger technology sector in Wall Street, making him a reputable source. In a recent interview, Ives established a new target price for Tesla to be $1,400 starting next month. Ives then raised his price target on Tesla shares to a new high, stating that the company will play a significant role in the developing EV industry. Ives Wedbush raised its price estimate on Tesla from $1,100 to $1,400 per share in a fresh note to clients on Wall Street. According to Ives, the electric vehicle maker is now worth $5 trillion, with Tesla potentially owning $2.5 trillion of it in 2022. Wedbush estimates that China is worth $400 a share of the Tesla story, and they've raised their price objective from $1,100 to $1,400, with a bull case of $1,800. Much has happened in the first quarter of the year, and it's been a bumpy ride for the electric car vehicle company Tesla. Ives pointed out that the past quarter's statistics were brilliant. He definitely agrees that the company produces earnings that were slightly above analysis expectations earnings, which came in at 2.52 cents per share compared to analysis projections of 2.36 cents per share. Also, revenue was $17.72 billion compared to $16.57 billion projected by analysis. In a note to investors, I've stated that semiconductor scarcity is still a major stumbling block in the auto industry, as well as worldwide logistical issues. Despite the fact that there are several competitors in the electric vehicle field, Tesla's remarkable performance speaks to an electric vehicle demand trajectory that appears to be very robust for Tesla, with clear momentum since the beginning of the year. While battling the chip scarcity, Tesla still continues to dominate market share, and China demand is again picking up after a rough start in 2021. Ives also stated that while public relations and safety issues were prominent early last year in China, it appears that demand and trend will soon shift into a bullish direction for Tesla towards the end of the year, with the company now on a 50,000 run rate for China in 2022. According to Ives' note, Tesla will lead the auto industry's shift to electric vehicles, which predicts the industry transformation to clean energy vehicles is going to cost $5 trillion over the next decade. According to Ives' note, the second driver of Tesla's success this year will be the opening of additional gigafactories in Berlin and Austin, which are going to reduce global production bottlenecks for Tesla. According to Wedbush, Tesla will have a capacity of nearly 2 million units per year by the end of 2022, up from approximately 1 million in 2021. Also, while supply chain issues and concerns have hampered Tesla's overall unit growth in 2021, Wedbush predicted that this dynamic would dramatically lessen in the future year, with 1.4 million to 1.5 million units likely within reach yearly for 2022. While China will be a key growth driver, we believe demand for Tesla's Model Y is developing in the United States and Europe, with 2022 likely to be another breakout year for Tesla and the EV sector, Ives wrote. Dan Ives also stated that Musk & Co. have navigated the chip supply shortages better than any automaker over the last 6 months, which is why Tesla is in a clear position of strength heading into the year, with an inflection point year ahead. Ives also stated that Wall Street is still digesting the massive transformation coming to the auto sector in 2022, and beyond due to the EV revolution, as the green tidal wave will result in a $5 trillion market opportunity over the next decade, with Tesla leading the way. Ives' target price appears to be based on the company's most recent quarter. Meanwhile, some analysts anticipate that Tesla's earnings this quarter will outperform the previous forecast. For instance, Trip Chowdhury, a senior analyst and managing director at Global Equities Research, just completed his standard Tesla plant research and is pretty excited about the electric car maker's production, shipping, and delivery prospects. According to Chowdhury, Tesla's momentum for the quarter is fairly strong next month. He also stated that he anticipates Tesla's earnings in the first quarter of this year to be higher than the last year's. Thus, we feel Ives' target price of $1,400 is actually becoming more likely as the first quarter of the year ends. The latest Chinese lockdowns appear to have hampered Tesla's production and delivery, with estimates indicating that the company shipped only 1,512 vehicles from its Chinese plant in April. The company intended to supply between 60 and 70,000 units in a typical month. Despite these challenges, Ives remains optimistic about the company, stating, "We maintain our outperform rating, with our views that after the June quarter doldrums, Tesla will start to see some smoother seas into China and into the second half of the year with momentum into 2023. Surprisingly, that analysis is still based on cautious EV adoption rates of 10% in 2025 and 30% in 2030. In the short term though, Ives believes that China will be key to Tesla's growth, accounting for 40% of the automaker's deliveries in 2022. Ives also thinks that the current supply chain challenges are impacting Tesla's Model 3 and Model Y car production by around 15%. The chip component shortage remains a headwind for Tesla and every other automaker. However, we view this as a transitory issue, with our core focus on Model 3 and Y demand, which is outstripping supply by roughly 15% as of today. According to Ives, Tesla should also gain from President Joe Biden's $550 billion infrastructure program, which is expected to enhance the country's electric vehicle industry and improve demand in China. Furthermore, Tesla's return to the $1 trillion market cap demonstrates the street's belief in this generational growth story. According to Ives, Musk is showing his powers with the Berlin and Austin construction projects, as well as the EV landscape. Everyone else is paying rent in Tesla's world at this time. The sector's competition is heating up, with Apple Inc. reportedly aiming to speed up the development of its own electric vehicle. In a second note, Wedbush analyst Ives stated that Apple might get into cooperation with Tesla to create its own automobiles next year. Furthermore, while Tesla is profitable, its NTM FCF yield is 0.76%, and that may be unsettling for some investors. Because of Tesla's FCF yield, which is similar to a growth stock multiple, investors should also keep an eye on the company's capacity to scale up production and delivery. But if Tesla stumbles and fails to fulfill expectations, the potential value compression might be substantial. Also, in the past 2 years of automotive supply chain hiccups, well, it's demonstrated Tesla's vertical integration capacity. It's also got the potential to manufacture its own battery cells, which we are currently awaiting delivery of its 4680 battery pack from Giga, Texas. Tesla has also been securing essential long-term raw material supplies for its battery supply chain, increasing the visibility of its own production. It has signed long-term contracts with Ganfeng Lithium of China. It's also established long-term contracts with Syra Resources of Australia. Furthermore, investors frequently overestimate Tesla's battery production prowess and size. Tesla's traditional competitors have formed alliances with South Korean battery makers. However, the relationship is more complicated than it appears. Companies are aware of Tesla's strong end demand and production size. As a result, Tesla will continue to attract a lot of attention from battery manufacturers who want to work on it. CATL, who is the world's largest battery manufacturer, has revealed plans to build an 80 gigawatt-hour monolithic factory in the United States. CATL is a critical Tesla partner in China, delivering LFP batteries for Tesla vehicles from Giga Shanghai. It is unfathomable that LFP will prioritize Tesla orders in the United States above all their own. As a result, we believe Tesla has major advantage in terms of battery supply security over the other automakers. These winning characteristics are likely to reinforce Danny Ives' optimistic estimate for Tesla stock in the long term. Meanwhile, in a note to clients, Jefferies analyst Philip Hokoy raised his Tesla price objective to $1,400 per share, the highest on Wall Street, from $950. Here's the core of his point of view, in which he explains how legacy automakers are fighting to catch up to Tesla. Like in 2020, Tesla's price is sending a warning of relevance to the traditional and also challenging OEMs, with an acceleration of self-funded growth in Q3 and unheard of returns at a brand price point Moving towards volume segments, Tesla looks more scaled up today than most OEMs and is in a position to turn the legacy zero-sum game into a negative one, he said. So what are your views on the Tesla stock price? Let us know down below in the comments, and while you're still here, go ahead and click one of these two videos on your screen. See you there.